Hi everyone, so this is Shannon Williams of D2R Taxes. I'm so excited that you are here with me today because I am going to go over 7 steps that are going to help all of you W-2 earners have a great year as it relates to filing your taxes and getting a good refund and making sure that you are not overpaying any longer. So if you guys don't mind, let's jump right into it. I want to make sure that our time with you is very valuable. So the first thing that I want you to do is I want you guys to make a decision. I need you to make a decision on what type of W-2 or taxpayer do you want to be. Are you going to be the W-2 earner that is okay with just receiving W-2 income? You are not looking to, start a business. You are not looking to scale a business. You are comfortable with working your W-2 job, whether it is making $30,000 a year or $300,000 a year. You are not looking to scale anything. You're comfortable with the hours. You're comfortable with the income, and you are comfortable with what you are paying in your taxes. The reason why I want you guys to make that decision is because if you stay a W-2 earner and you're comfortable with that, you don't want to make any decisions as it relates to maybe starting another business or doing these practical steps that I'm going to get into a little bit later on, then you have to accept the fact that your tax story may not change a lot, okay? There are going to be a couple of different things that we can tweak. Pretty much, if you, let's say, are receiving a check of $3,000 for a refund, but maybe, your job is the type of thing where there's not too many changes, right? You're not going to have any children, so your dependents are not going to change. Your income is not going to change that much. Maybe you might get a small raise here and there, but the other things that may change are pretty much set in stone. So again, if that's the case, then whatever your tax story is as it is right now is pretty much going to stay the same. You might have a very slight raise with different things, but again, it's not going to be a lot or enough to move the needle. Okay, so once you have made that decision, hey, I am comfortable with what I am doing right now. I am comfortable with my lifestyle. I'm comfortable with the income that I'm receiving, and I don't want to make too many changes. Well, guess what? This video is not for you, and I don't want to waste your time. But if you are saying, hey, I do know that I am overpaying on my taxes, I am willing to do whatever it takes to make sure that I'm no longer overpaying on my taxes. I can find 1,000,001 things that I can do with my money, then overpay Uncle Sam on my taxes. Well, then this video is for you. So first of all, congratulations on filling out the application and making sure that you are setting yourself up for success to change and do the actual steps to change your tax story. Okay, so first thing I want you to do is, again, make that decision. Second thing is let a professional handle your taxes. If you are going to make a change in actually wanting your taxes to be different, you have to accept the fact that if you're not in the tax industry, you probably are not knowledgeable enough to make sure that you are not overpaying. Okay, watching these YouTube videos and maybe that surface knowledge is not going to be enough for you to actually have a huge change in your tax story. So that's another thing that you want to understand. Doing your taxes on TurboTax, going to an H&R Block, Jackson Hewitt, not understanding what are the players that are in this game and what role do they play. Okay, H&R Block, Jackson Hewitt, they are just considered data entry, okay? And so if you are going to continue to go to those places, you have to understand that, again, your story, your tax story is not going to change a lot. When we say data entry in this industry, we mean that you hand these people papers, the receipts that you've already had, and their job is to document what you've already given them, right? Their job is not to ask probing questions. Their job is not to create different scenarios for you or have strategy and planning in place so that you can actually reap the benefits of different forms, different credits that you might be entitled to. Again, if you are comfortable with paying those Jackson Hewitt and H&R Block prices, or you're comfortable with that type of experience, then again, your tax situation is not going to change much. You need someone who is going to be either a CPA that is skilled in tax strategy, a tax strategist, or even a tax preparer that is skilled in tax strategy, that is going to ask certain questions, that is going to find out what field you're in and what may be different from maybe a nurse versus a lawyer. Maybe there are some other deductions that you can actually write off as opposed to this nurse or somebody else in another field. But H&R Block, Jackson Hewitt, doing your taxes yourself without having the knowledge of tax code and how to leverage tax code to work on your behalf, you will not be able to actually increase or stop yourself from overpaying. Okay, so that's another thing that it is super important for you guys to understand. Third thing that we want to talk about is you guys have got to stop filing exempt all year round. Okay, so let me explain something to you. Some time ago, I was in corporate. Okay, and so I am very familiar with W-2 jobs. I'm very familiar with HR. I'm very familiar with, at one point, living paycheck to paycheck. So you feel like you need to file exempt all year round, which means that you do not let the government get their fair share through federal withholding and through state withhold. Okay, and so what happens is when you get to tax paying season, you are already starting off at the negative. Now understand this, the government is going to get theirs. Okay, that's pretty much understood. Whether you give it to them when they're supposed to get it by each paycheck, or you wait until the beginning of the year when you file your taxes for the previous year, they are going to get it. However, what you are putting yourself in the process of doing is possibly being charged a penalty and fees because you did not let them take the correct amount out. Now, I know that there is a huge myth out there that says that you can file exempt for 6 months out of the year and then let them take the rest of it for the other 6 months out of the year and you will kind of break even. That is not the case. And should they move forward with giving you a penalty and fee, now you have to think about it. Now you are basically paying them for using your own money. Okay, so it's just very important that you just let them take the correct amount out. If, birthdays are coming along or Christmas, or maybe you have a really important bill that you need to pay and you need to file exempt for a couple of paychecks, not a couple of months, then that is fine. That is understandable. Okay, which brings me to number 4. All right. If you are going to file exempt at any part of the year, and even if you're not filing exempt, I encourage you to check your pay stubs periodically. The golden rule is that you want the federal withheld amount to be at least 10 to 12% of your year-to-date pay. Okay, so if you year-to-date have made $24,000, you should at least see $2,400 in the federal tax withheld part. Okay, if you have made $50,000, you should at least see at least $5,000. Now, when you do that, not only are you showing the government that you are a good taxpayer, but you are doing and following the rules as you should, but you are letting it be known that you will not allow them to take an extra penalty and fee. Remember, this is to give you some pointers to not overpay. When you file exempt on all year round, if they should decide to give you a penalty and a fee for using your own money, surely you are overpaying. So we want to go ahead and cut that out. If you allow them to take that 10 to 12%, most of the time you're going to get all of that back. Okay, so you want to think of it as maybe a savings account, if you will. If you can afford to make sure that they are getting their fair share and cutting out even the smallest possibility that they can and may take an additional fee or penalty because you are not allowing them to take the correct amount, you want to avoid that if possible. Okay, so again, number 4 is going to be to simply check your pay stubs every once in a while, maybe every 5 months, or maybe every 4 months. Look at it and make sure that the year to date or the amount that they're holding in federal is at least 10 to 12% of what you have been paid year to date. That is very, very important. If you notice that it is a little off, maybe it is a couple of $100 off, well then what you want to do is you want to put in the area of your W-4 where it allows you to take an additional amount, you want to allow them to take an additional amount. Maybe save $50 every paycheck until you get to a point to where it is at 10 to 12%. And sometimes you're going to want to play around with those numbers to see where that sweet spot is. If you need help with that, our office can help you fill out that W-4 if that's something that you feel like you need. Okay. So now the 5th thing that we're going to talk about today is what is the secret recipe. I'm going to give you guys the secret recipe. Okay. Now pretty much those are the only things that you can do if you are comfortable with your job. And again, you're not willing to, do other things. You're comfortable with your job. You don't want to start another job. You don't want new hours. You are happy with the pay. Nothing. You don't want to change anything. There's but so much that you guys are going to be able to change. And that's very important to understand. Okay. Even if you've spoken to a CPA, they may tell you, oh, we'll increase the amount that you put in your 401k, but that is not going to take you too far, okay? Especially if you are a high earning W-2 employee. If you are a client or a W-2 employee that's maybe making $200,000 a year, maybe $300,000 a year, some W-2 employees make over $500,000 a year, then that increasing your 401k is really not going to do much. And if I'm talking to you, then you guys know that there's but so much that you're able to do when you're filing your taxes, and you guys are killed on your taxes, right? Because it works off of tax brackets. The more you make, the more you're going to actually pay Uncle Sam. But again, remember, the whole purpose of this video is to stop you from overpaying. So the next thing I'm going to give you is the secret, guys. This is going to pretty much stop any W-2 earner, regardless of how much you make, from overpaying on your taxes. Now, here's what I want you to understand. When you are only a W-2 earner, this is simply your tax story. You make what you're going to make here, you are taxed at that amount, and you're left to spend the rest. Okay, so let me just give you a quick example just to paint the picture for you. You make $500,000, okay? You are taxed at that $500,000, and let's just say that taxed amount is $175,000. That means that is what you are going to pay to the government, and you will be left to spend the rest. That is not considering your bills that you have to pay. That's not including your rent, your mortgage, your utilities, childcare, all of the groceries, all of the different things that you have to pay to live day to day, let alone to have a lifestyle or after work lifestyle, right? That's not going to cover any of that. Again, when you are just a W-2 employee, you make what you're going to make. Uncle Sam says, look, I'm going to take mine off of the top. I'm going to get my tax money, and then you can go ahead and spend the rest. However, here is the secret. When you are a W-2 earner, you can still be that same W-2 earner, but when you have a side hustle, when you're self-employed or you're a corporation, the government says now you are transitioning from just a worker to now a business owner. And because you are a business owner, we are going to give you an incentive because you're basically doing things that we're not going to do. You are providing jobs to people, okay? You are stimulating the economy, okay? And you're starting businesses, okay? So that takes you in a whole different ball game, which opens up a whole different world of taxes, or tax benefits. So let's just put it this way. When you go ahead and make that transition, okay, now the government says as an incentive, we are going to allow you to make that $500,000, but we're not going to tax you up front. We're going to allow you to take all of your bills, you spend what you're going to spend in this business, and then we will go ahead and tax you on what's left. So the government says, hey, we're not going to take our money up front. Okay, we're going to allow you to spend what you're going to spend. You can go ahead and write off the things that you need to do to run your business, which most of the time is things that you're going to do anyway, even if you're not a business owner. So now what you have done is you've taken yourself from this side where the government will tax you up front to a side of, okay, let us give you credit for your rent, for your car note, for your utilities, for the supplies that you had to use to put in the business. And because of that, we're going to let you spend what you need to spend, and we will tax you on what's left, okay? And so the lower it is, the lower tax bracket you're in. So it's kind of like a win-win situation in two different areas. Either I can be here as a W-2 earner and be taxed at, let's just say 32%, okay? And I'm going to be taxed at $500,000 at 32%. That is a lot of money, whereby as if you start a side hustle or some sort of business that you're running, a hobby that you're getting paid for, okay, then we are going to allow you to still make that same $500,000, but your expenses maybe bring you down to now only being taxed at, let's say, $300,000 at a lower tax bracket at that. Okay, so that is the secret recipe, guys. Now, I don't want you guys to get worried at all. Sometimes people hear side hustle business and they get themselves in a frenzy because they're like, listen, I don't want to run another business. I'm not interested in running another business. I am good with the hours that I work here in this business, and I'm doing too much as it is. Okay, if that's the case, that is totally okay. Understand that starting a side business could be just putting a price on something that you're going to do anyway. All right. So I will give you a quick example. In my beginning years of starting this tax office, I had a client who, she was a W-2 employee. She was one of those clients where not too much was going to change. An elderly woman who was not interested in having any more children. So that means that her dependents weren't going to change. Her income wasn't going to change because her raises were very small, right? So she was still in the same tax bracket every single year. So not too much change, right? And so she owed every single year because she was just a W-2 employee on this side of the track, okay? When we educated her on these same practical things that I am giving you to do, she then started taking a business that she was already doing anyway. So during Thanksgiving, during Christmas, during Valentine's Day, she would bake, or she would do the chocolate covered strawberries and put little baskets together, and she would sell them at the office that she worked at during that time. And she was getting paid for it, okay? Now, this was a small business, so she didn't have to do a lot of business formation or a lot of paperwork. She just simply did a sole proprietorship, so it was attached to her social. But now we told her how to keep the records of her getting paid, okay? And because she was able to do that, and again, guys, here's the important part. This is something that she was going to do anyway, that she was still doing every single year at several different occasions during the year. So what we did is we educated her on how to now make this a legitimate business, to take this from a hobby to a business that she is actually getting paid for. And so it allowed her to come from here to now over here playing with the big boys and opening up a tax benefits for her so that she could stop herself from overpaying, from doing something, making her business a legitimate business for, again, a bakery that she was already doing. Now she was able to write off some of her groceries that she was spending to make these things. Now she was able to write off part of her home. Now she was able to write off part of her utilities. Now she was able to write off certain mileage, right? Or she was able to write off some actual expenses. There were just things that she was able to now tap into because she started this business. Okay, so again, when you hear us say business, that doesn't mean that you have to be the next Google or the next Amazon. Okay, we can have a discussion on some things that you're going to do anyway, that we can tweak and make this into a business, and you can still do the same things that you are already doing. You can run it the same way. It's all in the records that you keep. Okay, so that's very important to understand. Now that you understand what the secret formula is, and you've actually gotten number 6, which is the side hustle, now what I want you to do is make another decision. Okay, and I forgot to let you know that young lady actually now was receiving a refund instead of always owing. Okay, so that is the importance of that story. Because she tapped into that secret recipe, she was able to stop overpaying. She was overpaying because she owed every single year and paid the government every single year, when in actuality she should have been getting a refund. So she took the action steps to stop herself and to change her situation. Okay, now once you do that, then I want you to think deeper and make another decision, which is something that we discussed with this young lady as well. The next decision that I want you to make is, how far do I want this business to go? Okay, because what you have to understand is you cannot do this just for the sake of getting a refund. Because if you continuously take losses throughout the years in a business, that is a red flag, and it could cause you to be audited. So if you are not really wanting to receive some sort of income from this business or side hustle, depending on how far do you want to take it, okay, then I don't recommend that you do this. Again, it doesn't have to be Amazon, and that is the decision that you have to make. Do I want this just to be a small bakery that I'm running out of my home, that I am making very little money from, but I'm using it to tap into tax benefits? Or do I want to really create another stream of income, maybe turn this into a business and turn it from a hobby to a side hustle to now self-employed real business that I am running as a business, that I'm going to want to get investors and use OPM, other people's money, right? If that's the case, then there are a whole different set of tax benefits that you can tap into, okay? So let's go ahead and just recap. I'm sure this was a mouthful. This is a lot of information for you, but first thing you want to do is make a decision, okay? You want to make a decision on what type of taxpayer do you want to be. Do you want to be a taxpayer that is okay with where you're at? You're okay with overpaying. You don't feel like you're overpaying, and you just don't want to make too many changes, and that's okay. Or are you tired of overpaying? Do you feel like you can find 1,000,001 things to do with your own money? Then pay it to Uncle Sam. That's most of the people that we talk to. They are tired of overpaying on their taxes. As a matter of fact, it aggravates them to get to tax season because they know they are overpaying on their taxes. They feel wronged because Uncle Sam is not waking up with you to do this work. So to pay Uncle Sam that amount of money when you don't have to is a problem. Now, let's be clear. We are never going to advise you not to pay taxes. What we are saying is do not overpay taxes, right? Okay. So the second thing that you're going to do after you make this decision is you are going to let the professionals take care of your taxes. If you don't understand how to leverage tax code, if you don't have the time to read the 80 billion or 80,000 plus pages of the tax code, then you may want to hire a tax professional to handle this stuff for you. If I am not a hairdresser, I am not going to go in and try to color my own hair. I may walk out bald because I don't know what I am doing. I don't know what chemicals should be mixed with other chemicals, what would damage my hair, and what would simply cause my scalp to burn or anything like that. If I am not a doctor, I am not going to perform surgery on anyone because I don't know what I'm doing. If I am not a lawyer, I'm not going to represent myself in a space or a case where I need a lawyer, right? So those are all things that you have to keep in mind. Number two, let the professionals handle your taxes and understand when you hire the professional, which type of professional you are hiring, okay? Are you hiring H&R Block or somebody who just does data entry? Are you hiring a CPA whose job is just to account for what it is that you're saying you did the previous year? Or are you hiring a tax strategist, which is going to give you strategy and take you through tax planning? Those are three different things, okay? Three different things. Three different professions that are going to give you three different results. So that's very important that you understand as well. When you're going to H&R Block or CPA to file your taxes, typically that's for the previous year. It's already done. There's not much that you can do about what has already been done. It's kind of cut and dry. It is what it is. Their job is to take the paperwork that you give them and now give it to the government to account for what you said. A tax strategist and a tax planner is going to say, hey, so-and-so, listen, let's go ahead and do a quarterly audit. Let me see where your numbers are, and then I can make these recommendations to kind of safeguard, if you will, or play damage control to make sure that before you get to tax paying season, we're giving you steps that you can take to make sure that you're now providing your CPAs or your tax preparers with a whole new plan, which is going to create an outcome of you now saving money on your taxes, okay? So that's very important too. That's number two. Number three, do not file exempt all year. It's very important that you do not file exempt all year. If you file exempt all year, you will start off owing, which is going to lessen your amount, okay? Not only that, but you are giving yourself a chance of having to pay a penalty for not allowing the IRS or the government to take their fair share or their cut. And again, this is to stop you from overpaying. So a part of overpaying is not putting certain things in place so that you are now not receiving extra penalties and fees and doing things correctly. That's another way that you stop yourself from overpaying. So that is number three. Number four is check your paycheck periodically. Number four, check your paycheck periodically, okay? And the reason why you want to do that is you want to make sure that the federal withheld amount is at least 10 to 12% of your year to date. If it's not, you kind of want to play with the numbers to make sure that by that last check in December, you are at the sweet spot of 10 to 12%. Then you take away the chance of the government giving you an extra penalty or fee. Not only that, but most of the time, you're going to get that money back completely, okay, which gives you more opportunity to not overpay and do other things with your money, like going forward and building generational wealth, right? Things of that nature, which is a whole different video that we will actually discuss at a later date, okay? And so then we have the secret recipe, which is very important. That secret recipe, when you're just a W-2 earner, all right, you're going to get paid here. You're going to be taxed first. Uncle Sam is going to take their money first, and then you're left to spend what's left. That is how you build a lifestyle of living paycheck to paycheck for most people, because Uncle Sam, the government, is going to take their money up top, and then again you're left to do what you need to do, bills, extracurricular activities, anything else, cars, whatever it is, out of what's left. which to me is a little unfair because you are the one doing the work, right? But it's just the world that we live in, okay? However, there is something that you can do about it. You can switch from just a W-2 to now transitioning to that same W-2, but now maybe you have a side hustle, a hobby that you have turned into a business that you're getting paid for. And if that's the case, now you are able to still make your money here, okay? From that W-2 side, you're still going to make that same $500,000, and maybe you're also going to make a couple of dollars from this business that you've started. But because you have started this business, okay, because you have started this business, now the government says, hey, you're on a different side of that tax code now, honey. Now you can tap into different tax benefits. And so because of that, we're going to give you an incentive. That incentive means that we're going to allow you to still make your money. You can spend what you're going to spend, and we'll go ahead and tax you on what's left, okay? So that is a lower amount, lower tax bracket, leaving you to make more money, keep it in your pocket, and reinvest it however you want to, okay? The last thing that you're going to do is you're going to decide if you want to turn that side hustle into a true business. Okay, so then if you decide to do that, then there are a couple of things that you're going to want to do, like business formation. And if you don't have the time to do that, maybe you want to invest in real estate. That is another way that you will be able to go ahead and actually, stop overpaying on your taxes. So one, you're either going to be able to start a business or you can invest in real estate. Those are the top two ways that you are going to change your situation. Now, I always recommend real estate first, hence the fact that I am a tax strategist as well as a realtor, but that's not the reason why I recommend it, okay? Because if you think about it, I'm licensed in 2 states. What about all of the other states? No, I push real estate because it opens up a world full of tax benefit. And real estate is one of the only ways that you can actually have more income coming in and build generational wealth, leave things to your children, your family, and build certain things. But it also allows you to be have no income on paper, okay? And it's one of the only ways that even though you look like you have no income on paper, it does not stop you from, receiving other loans or things of that nature. And those are all advanced strategies that we will get into once we get there. But I want to make sure that I'm meeting you where you are. You guys are not really ready for those advanced strategies as we speak, but we can absolutely get there. Thank you guys so much for joining. Please make sure that you book your breakthrough tax strategy session so that we can talk to you a little bit about your situation personally and figure out how we can stop you from overpaying on your taxes, okay? Again, my name is Shannon Williams of D2R Taxes. I am a lead tax strategist. I help W-2 earners receive the maximum refund legally, and then I can show you how to reinvest it so that you use your taxes as a tool for generational wealth and not just a way to get a check at a certain time of the year, okay? And I also help business owners, self-employed corporation, save on their taxes through tax strategy and tax planning, which also allows them to use their refund or their tax story as a tool for generational wealth as well. Thank you guys for joining. Have a great day, and make sure you follow us on Instagram for tax tidbits at The Real Shannon Williams. Again, The Real Shannon Williams, ShannonWilliams, The Real Shannon Williams. Thanks, guys. Bye.